Are you considering buying your first home but feeling unsure which program fits you best? In this video, I'll walk you through my top 6 first-time homebuyer loans. Hi there, I'm a licensed real estate broker and loan officer in California. I've served in mortgage for over 20 years, and I've had the honor of helping thousands of buyers into their first homes. So, what counts as a first-time buyer? For lending purposes, you're considered a first-timer if you haven't owned a home in the past 3 years. So, even if you purchased a house 20 years ago but sold it 3 years ago, you still qualify, and that status can unlock programs you wouldn't otherwise access. For instance, on a conventional loan, first-timers only need 3% down versus 5% for repeat buyers. Now, that 3%, that's a savings of $12,000 on a $600,000 home. Also, there are programs that will consider you a first-time buyer even if you own a home, but it hasn't been your primary residence in the last 3 years. So let's talk about the first one. FHA loans are a favorite among first-time buyers due to their forgiving credit and debt-to-income standards. You can qualify with a credit score as low as a 580 by putting only 3.5% down, or use a 10% down payment to get scores down to 500. Carrying student loans, auto payments, or credit card balances won't necessarily disqualify you. FHA often accommodates higher debt loads. On top of that, FHA rates and monthly are typically more affordable than conventional financing, especially if your credit score is below 680 or if you're purchasing a 2 to 4 unit property, or even an FHA approved condo. Now, there is an upfront mortgage insurance premium that's tacked onto your loan balance, plus ongoing insurance until you refinance or sell. Number 2, state down payment assistance. Many states offer DPA programs that offer zero interest loans or grants for your down payment and closing costs. Think of it as a way to boost your buying power without the extra costs. Some DPAs must be repaid when you sell, refinance, or pay off your mortgage. Others automatically forgive the balance after a set period of time, often after 5 years. Grants never require repayment. Because not every lender participates in these programs, you'll need to research which DPAs are available, where you're buying, and ask your loan officer which ones they support. In California, for example, one of our most popular programs provide up to 6.5% of the purchase price towards down payment and closing cost assistance, and it's continually funded, so you don't have to worry about the funds running out. Even better, most DPAs can be stacked with conventional FHA or VA financing for maximum flexibility. Number 3, conventional 3% down payment. First-time buyers can offer a conventional loan with only 3% down. That's less than FHA's 3.5% requirement. Because conventional mortgages are well understood by sellers, they're often more appealing in competitive markets. This route is advantageous if you have strong credit. The higher the score, the lower your PMI rate is. And once you've built 20% equity, the PMI automatically falls off, reducing your monthly payment even further. Number 4, purchase and renovation loans. Looking to buy a fixer? Purchase and renovation loans bundle your home purchase and remodeling costs into a single mortgage, so you can start building equity almost immediately. Whether you need paint, flooring, or more extensive structural work, the loan covers it all. Just be prepared to work with the contractors and manage some extra paperwork. In many cases, you can even finance the mortgage payments during the renovation period, letting you live in the home or not live in it while the remodeling is happening. These programs are a fast track to growing equity within months. You can get in on a purchase plus renovation loan with as little as 3.5% down. And if you already own a home, you can refinance into one of these, even if you originally bought with minimal equity. Because the loan is underwritten on the home's estimated after rehab value, you'll have more collateral when the work is actually done. Both FHA and conventional versions are available, giving you flexibility to choose the structure that best fits your situation. Number 5, USDA loans. If you're eyeing a home in a designated rural area, USDA financing may cover 100% of the purchase price. No down payment and no mortgage insurance is required. Credit standards are friendlier than many loans, though household income caps and debt limits still apply. Interestingly, some suburban pockets now qualify, so check the eligibility map you might find your dream home neighborhood is covered. And number 6, VA loans. For eligible veterans, VA loans are hard to beat. There's no down payment, no mortgage insurance, and minimal fees. Credit debt requirements are relaxed, making approval a lot smoother. It's our way of saying thanks to those who've served. Every borrower situation is unique, so compare those options carefully to see which aligns with your goals, monthly payments, long-term savings, or renovation plans. Ready to get started or want personalized guidance? You can click the link below in the description area to set up a time at your convenience. Even if you're not ready to buy now, I always encourage you to inquire today because knowing what's available today can help you better plan for tomorrow. I hope you found this helpful. Don't forget to subscribe and hit the bell for more homebuyer tips. Go ahead and hit that like button and share it with someone who could benefit as well. Until next time, I'll see you on the next one.